Hello, I'm Ricky Lee, and today on the watch list, we're joined by Playboy. The company has just announced a major strategic transaction, selling 50% of its China business to United Trademark Group in a deal that includes $122 million in guaranteed payments, supports debt reduction, and advances Playboy's shift toward a more asset-light operating model. Joining me today to discuss is Ben Kohn, CEO and President. Ben, welcome to the watch list.
Thanks for having me, Ricky. Good to be here.
Ben, can you tell us, Playboy has announced the sale of 50% of its China licensing business. How does this transaction fit into your asset light strategy and your plans to reduce debt?
Sure. So, pleased to announce that we have signed a deal with UTG, actually a former licensee of the company's way back then, who now runs the Jeep business in China, which is $1 billion plus business. They run Dickies and others. So they're a true operator. What we've done is we've transformed what is a licensing business in China to a joint venture with UTG, where they'll buy 50% of our China IP for $122 million in contractual payments. Good news for debt is we're going to use a minimum of $50 million of the proceeds to delever the company. So we've taken our debt from $220 million to $160 million currently. We have a lot of cash on our balance sheet, so our net debt is actually lower than that. But then moving forward, we'll take $50 million, a minimum of $50 million of these proceeds to continue to delever the company. And so on a net debt basis, we'll be well under $100 million. It's transformative in that it really aligns ourselves with a true operator versus licensees of the business. They will make a significant investment into our China business, really reestablishing the brand and what it used to be.
Amazing.
And then we get, in addition to the $122 million, we get 50% of the ups of that business moving forward as well. And so, I look at the 122 as sort of the floor. The ceiling is obviously much higher. The 122 is significant because what we wanted to make sure is that we guaranteed our current cash flows for the next 8 years, which we have as part of that deal. And so we expect those cash flows actually moving forward once UTG is fully operational to be well in excess of those minimum guarantees moving forward, and the upside for Playboy to be much bigger. Our business in China was actually a $40 million a year net business to us prior to COVID. So consumers in China are spending in excess of $1 billion. And we hope with UTG and the investment that they've committed to make back into the business, that we can return Playboy to at least that level, if not bigger than that moving forward.
Amazing. And speaking of moving forward, then what other steps are you taking to further deleverage the business and drive long-term value for shareholders?
Well, look, I mean, in addition to China, which is a major milestone, getting our net debt to below $100 million, I think it's really the operational performance in this restructuring that we've done over the past couple of years. And so even though we haven't announced our fourth quarter numbers yet, we'll be doing that here in a few weeks. If you look at the first 3 quarters of the year, really showing consistent and constant EBITDA growth, adjusted EBITDA growth, as well as in the third quarter, turning a net profit for the first time since we've gone public. The fourth quarter was a good quarter, and we expect those trends to continue moving forward. And so, we still have a lot of arrows, for lack of a better term, in our quiver. The China deal is a major milestone, but there's nothing better than operational performance. And, the deals that we did a year ago with Byborg, the deal that we're doing now with China, almost just over a year later, are really transformative in simplifying our operations. In addition to the contractual cash flows of $122 million, UTG will be actually taking over the other operations that we were managing, including trademark registration, trademark defense. We won that $81 million lawsuit last year against our former licensing partner in China. And so, we're going to be aggressively doing everything we can to collect on that. Again, to the extent we are able to collect on that, we'll be using all of those proceeds to continue to delever the company moving forward.
Well, thank you so much for your time today, Ben.
Thank you for having me, Ricky. Appreciate being here.
So once again, that is Ben Kohn, CEO of Playboy. For more on the company's strategy and global licensing business, visit investors.playboy.com. That's all for this episode of The Watch List. I'm Ricky Lee. Make good choices today.